Are you wondering if it's time to lower your monthly house payment so you can get some relief? This is the time. This is the place. I want to introduce you to Jenny Butorac at 21st Century Lending. She is going to take you on a little journey. It's David Shelton, and we're coming to you live with Jenny Butorac from 21st Century Lending. This is going to be a great meeting. It's jam-packed with information valuable to you and your friends. Let's go. Hey, Jenny. Good to see you.
Hey.
All right.
Good to see you as well. How are you doing?
Oh, it's so good. It's good to see you. We have to do this more often because sometimes you're just talking on the phone. Maybe you're not ready for the phone. And certainly there are times that I'm not ready as well. But so we're talking today about a few different loan products, and I'm so grateful that you're able to carve out some time for our listeners to get to know you better and 21st Century Lending better, and what makes the difference in using 21st Century Lending over any other lender, and in particular with Jenny Butorac. Why don't you introduce yourself and just tell us a little bit about you, Jenny?
Well, thank you, David. My name is Jenny Butorac. I have been in the mortgage industry for about 3.5 years now. Got about 250 loans under my belt. So I'm working hard, keeping busy, definitely for sure. I'm a mom. I've got 2 little ones at home. I am also a military wife. My husband is retired from the Navy. And other than that, it's just a lot of kids and loans.
Wow.
That's me in a nutshell. Kids and loans is what I do all day, but I love it. So I'm happy to be here, happy to be part of this with you, David.
Well, Jenny, you being a military wife, that's awesome because you're familiar with the struggles as well as the benefits, right? And there's both. So I know that we have clients, mutual clients, that we're getting them ready to purchase a home. They're using a VA loan, and I know that there's a particular VA loan that we'd like to make people aware of today. What is that loan? And tell us a little bit about it and go into it.
So what we're talking about is the VA IRRRL. It's what is our VA refinance, and it's called our IRRRL. It's our interest rate reduction refinance loan. A lot of acronyms there, but we love that. So what it does is essentially it's a super easy, streamlined way for a VA loan holder to be able to refinance and reduce their interest rate. So let me pull up just a real quick flyer we got going for it.
Awesome. The VA IRRRL.
The VA IRRRL. So it's one of our biggest sellers right now, just because in general, in the last couple of years, if you've gotten a loan, you know that our interest rates were a little bit higher than comfortable, right? We all got kind of into these interest rates where we are waiting for the moment that is happening now, which is refi time. We're starting to see big dips in interest rates. So the VA IRRRL is one of our best tools because, again, it's streamlined, it's fast. They average out a closing of less than 20 days. We don't need things like appraisals. We don't need to verify your income assets. It's literally, we're just taking your original loan and we're scooching it down the line into a new interest rate. So we like to streamline it, make it really easy, make it really kind of, enjoyable for everybody to come out with a lesser payment, which is great.
So do we have to pay for that? Does the veteran have to pay anything for that, to do that?
So any closing costs that go within this loan are just rolled into the loan. So typically for these types of loans, there's no out-of-pocket cost.
Wow.
It's just something like everything's pretty minimal as far as cost goes as well for this type of loan refinance. And we're able to just tack it right on so that they don't have to worry about coming out of pocket at all.
Wow. So what would, based on today's rates, where would someone need to be to make this really make sense? And then would they do it again when the rate drops another 1.5 or something like that, if it does do that?
This is always available.
Okay.
Always available for our VA clients as an IRRRL. Right now, I always consider it to be worth it when we're looking at that at least like 0.5 point to a point difference.
Okay.
So, if we're looking at rates right now and we are typically with the VA, if we're up in those, high 6s, low 7s, it's definitely worth a look to be able just to get priced out and see kind of what we can bring it down to, because we're getting as low now into the high 5s with the VA.
Okay.
So that's kind of the good news, is that we can get into those slots to be able to refi down.
Is that the interest rate or the APR in the high 5s?
Interest rate.
Okay. Super. Oh, you have another program I know as well. So for our veterans, they want to take advantage of that IRR. What about the veterans? Just the ordinary purchase. It's a pretty refined process as well, right?
Yes, it is. It's a little more stringent, which I think scares a lot of people off, but it's what I live and breathe. It's my jam. So me and a VA loan, we get along.
Yeah.
So as far as that goes, with the VA loan, the reason why we have stricter policies for those is because the VA is guaranteeing this home is livable for their veteran,
Yeah.
right? We want to make sure that we're not getting our veterans into a situation where their home's going to be considered, not livable immediately. So with that being said, that's why we do have, different levels of requirements for a VA loan. But that being said, again, not anything to scare anybody away. It's really easy to hit. We're just looking for, again, livable quarters without major components missing, without
Right.
holes in the walls, stuff like that. It's a turnkey.
Yeah. Yeah, so I know that I've had a good number of veteran clients, and they think that, well, VA loan does the home inspection. It doesn't do the home inspection, but the VA appraisal is a step up appraisal where they're looking for things like, like you said, they're looking to make sure that all the plumbing is working, all the electrical's working, the shingles aren't curling, the windows aren't broken, paint's not peeling, there aren't any uneven trip hazards in the concrete, stuff like that, and they'll call them out in the appraisal, and then the buyer gets to go to the seller and say, we'd still love this home, but these things need to be done in order for the property to appraise. So
Absolutely.
do those things need to get, if there are things like that, and they're negotiated, can they be put into a work escrow and the work to be done after the closing, or does it all need to be done before closing?
So typically when we're looking at appraisals to get cleared, things that are called out on the appraisal and specifically called out as a subject to item, meaning that they need to be repaired ahead of time.
Okay.
Those will need to get repaired before we do close escrow, because we will need a reinspection to confirm that. But again, we're just making sure that the veteran is getting into a home that's livable right away. So they're not going to nitpick on some of the things I feel like people might be a little scared of.
Yeah.
They're just making sure that everything's in working order. That being said, little things that they find outside, little things that you find on your home inspection, we never see your home inspection.
Right.
So again, we're looking for major changes, and anything that gets called out in the appraisal, also anything in the pest report.
Mm-hmm.
That's really all we're looking for.
Yeah, and that pest report is key, right?
Yes.
That is
Yes,
something
it
that
is.
you have to have as a veteran. Too many termite claims or something.
Or dry rot, anything like that needs to be repaired quickly. But in all honesty, I've never had a problem where a seller wasn't willing to do that for one of our veterans.
That's awesome. A real quick story about our recent success on a VA loan. How many days did it take?
18 days.
Yeah, that was incredible. From contract to close. That was phenomenal. It blessed.
On a new build as well.
Yeah, it blessed the buyers. It blessed the sellers. It was just a blessing on all sides. You did extremely well. It was a great client. Veteran is super happy, really honored, and they came from another part of the country that kind of everybody that they dealt with was sort of harsh because it's the Northeast, but they're so pleased to be here, and then to have you treat them like royalty was just phenomenal. You did a great job, and they expressed their thanks even this morning. Yeah. On the phone. So tell us about the FHA Streamline Loan. That's a product that I haven't heard articulated before. Let us know a little bit about that, if you would.
So our FHA Streamline Refinance is very similar to like our VA IRRRL, right? We're just streamlining the product. So this is somebody coming in with a previous FHA loan or a current FHA loan that they want to go ahead and refinance for a lower interest rate. Again, faster than normal because we're streamlining it. We're not kind of dealing with the little bells and the whistles everywhere. We just want to get from point A to point B with a lower interest rate. So it makes it really easy for those clients that have FHA loans currently to be able to do that as well.
Yeah.
So we always talk about, our FHA and our VA as both of our streamlined products to be able to get where we need to go quickly, which is great when we're refinancing. And again, anybody in the last couple of years that's even got into an FHA loan at that little bit of a higher rate than we're seeing right now. And right now, our FHA rates are top tier.
They're primo.
Some of the best kind of FHA rates in the market right now.
Yeah.
I actually just priced one out this morning at like a 5.75, and that's paying no points.
Wow.
So we definitely like to hear that. We definitely like to get people into those types of loans because these are great for those first-time home buyers, or really just anybody that doesn't have the 20% or want to put the 20% down initially.
Yeah.
This kind of gives them that breathing room to get enough equity under their belt to be able to get where they need to go. FHA Streamline is great because now we're just lowering your payment. Wow. We're not taking anything away from the loan. We're just making it easier to pay it.
Wow, that's going to help a lot. Hey, what about people, this is a different product, but what about people that have an FHA loan, it's assumable, and it's at 3% interest, right? Or something crazy like that. What does that process look like, and do you handle that regardless of where that FHA home was or loan was originated?
Assumable loans are great. Like we always have the option to be able to perform an assumable loan.
Okay.
So not always, they always are a great selling point, right? That somebody wants to assume the loan. Now, what a lot of people don't really realize about an assumable loan is that while we are assuming that loan, we do need the overage to be covered. And so, that is where educating our clients on assumable loans becomes really imperative, because we need for them to be able to cover that alternative part that hasn't been assumed.
Okay.
So with that being said, again, assumable loans is one of those perfect time and place.
Right.
If we can get in the perfect time and place for their situation, an assumable loan is a magnificent tool to be able to get our clients where they need to be.
Yeah.
But, it is all about education, because a lot of the times we see these signs, assumable, the 2.5%, the 3%, the 3.5%. But if they're having to be expected to come in with $100,000 that they don't have, it's not going to work. So that is always my, my great win when we can get an assumable loan that works for everybody.
Yeah.
Because again, while it's not impossible to fit in, it's a definite box we have to get them in to make it work for everybody. But again, wonderful product. Yeah.
Well, that's great. We'll have to kind of dig into some more about that, because I know that people are attracted and are asking for that. They're asking for seller financing as the times have changed, or maybe we're getting into another time where a lot of refis are going to happen. It looks like that is inevitable here in the next few months. So, but those people that can't give up that 3% loan, there's some options for them. Yeah, they just have to understand what the ramifications are, right? Well, that's incredible for this week's session. Hopefully we can kind of weekly grab your time and have some additional loan products that we can talk about. I know there's USDA rule development that for the homes that are outside of our MSA or outside of Sioux Falls proper, but within our MSA or Southwest Minnesota as well. Those are great loans. Oftentimes, you can make too much money for those, right? There's an income.
Can't make too much money.
Yeah, so we'll go over that and the benefits of that. It is low down payment typically.
Or no down payment.
No down
payment is required for a USDA loan.
Right.
We do have the income limits and a stricter debt to income ratio. But again, if we can fit somebody in that box, it is a great loan to have.
Yeah. Hey, Jenny, just for everyone, this little thing. So when I refer someone over to you and they want to get a comparative analysis with the bank that they've already maybe been pre-qualified with or whatever, or maybe they're just going through the process, with you, what does that look like? What almost in every loan, what are you asking for? W-2s, tax returns? What are the the items that people need to have ready to get to you, whether it's uploading them into a portal or scanning them in and emailing them? Can you talk to us a little bit about that?
Oh, absolutely. Like just in general, my process, the first thing I need from somebody is just time. I ask for about 5 to 10 minutes just to kind of go over verbally what we're talking about. Because for me, like, we talked about customer service. I want to make sure before they're digging through their files, before we're running any credit and spending any money, that they're comfortable with the option that we're looking at.
Yeah.
So it's just time at first. We're just having a just short conversation. They give me verbal information. And from there, I give them their first round of loan options. They take a look,
Right.
off of what they're verbally telling me. This is kind of what we're looking at. Is this what you're looking for? And if they're like, yes, that's perfect, I want to go. At that point, they are given an invitation via email into an online portal. It's a secure portal for them. It's their own file. They go in and they fill out all of their personal information, and from there it will trigger to ask for documentation that are like a couple of years of W-2s,
Yeah.
the last 30 days of pay stubs, the last couple months of bank statements for whatever account we're going to be using for down payment and closing costs, driver's license, stuff like that. And again, from there, once I'm starting to confirm your income, we take a second look because again, I want to make sure that we are very comfortable before I pull credit. So pulling credit for me is one of my final items before somebody is officially pre-approved, because again, we're spending money to do that and we're doing a hard inquiry. I want to make sure we're ready.
Wow.
So once we pull credit, we get ready, we are pre-approved. That's when I send you out shopping and you are at your own dispose. You've got your budget, you've got,
You get your papers.
The world. Yep, we are finding the home. And so it really just kind of keeps going from there and there. At that point, it's your turn.
Yeah.
We take you take
Yeah.
you shopping. And it's all fun and games
Yeah.
and then till we get back to me, and we have a contract in hand.
So what are we looking at for closing time? I know that we were together in Pontiac, Michigan just a few weeks ago, and in leading up to this, what are we looking at kind of in general and in loans type specific as far as from contract to close with the process? Once they're pre-approved, getting that out of the way, right? Yeah.
That was what I was going to say. It really highly depends on where we are on day one.
Yeah.
So if we are coming in and it's been a Hail Mary and we saw a house and we just threw an offer in and threw, hoping it would stick, and it did.
Yeah.
Well, then, we're looking at about a 30-day close, just because we want to take that initial time to make sure that all of our boxes are checked in the pre-approval process as well.
Perfect.
That being said, I'm moving as fast as the client's moving. If somebody's giving me all of their documentation within, a day, I can have them pre-approved within a day.
Sweet.
So we're just moving as fast as we can. That being said, loan type also highly affects how fast we're allowed to move.
Yeah.
Now, we did just close a VA loan in 18 days,
Yeah.
which was epic.
Yeah.
It's a win for, the year, because that is incredibly fast for a VA
Yeah.
loan. That being said, it's not impossible, but in general, I always like to give the standard of a 30-day, unless, we have to tweak that in any way or shape or form, and 30 days or less is always kind of how I present that. Because if we can close you earlier, we absolutely will. Yeah. Right? That's kind of our standard, is that we like to keep it at that 30-day for all those time constraints.
Yeah.
Now, sometimes, we could be in a position where we do need a reinspection for an appraisal, and that adds another week to get that inspector out. Yeah. So I always like to set the expectation at 30 days, because I never like coming back with bad news. Right. I'd much rather have the 30 days and come back at 21 days and be like, you are ready to go. Let's close her out. Yeah. Rather than coming in at 21 days being like, we're going to need another week. Yeah. You know, it's I like the latter a lot better than I like having to come in and change your plans in that sense. Right. So I always like to keep that 30-day standard. With mobile homes, it does take longer. Yeah. And that just comes down to, while we are in a heightened mobile home market, the lender we go with, being the best lender in the country for mobile homes, they get busy. Yeah. And they tend to move a little bit slower, and turn times get a little bit longer in this kind of market, which is fine. Yeah. So for mobile homes, we're looking at a 45 to 60 day. Yeah. And that's just purely because they do things a little old school as well. Yeah. So they take a little bit longer. Yeah. But that's okay. At the end of the day, a 45-day wait to get into the home that you've been waiting for is still a good deal. Yeah. The mind blower about mobile homes, I'm seeing so many mobile homes that have this incredible primary suite that's just like a
it's just crazy, right? People are going like, you
Oh,
mean
yeah.
I actually get I get a walk-in closet and a big, beautiful bathroom and a huge master bedroom? It's like, okay, let's go. It's
Oh, they're not the mobile homes of yesteryear for
Yeah,
sure.
yeah.
I've seen some that are just gorgeous,
drop dead.
absolutely gorgeous with the flooring and the cabinetry, like the cabinetry and like the master bedrooms
Yeah.
and the bathrooms, and you're just looking at it and you're like, wait a minute, this isn't a mobile home? Like, this is fantastic.
Yeah.
And I'm seeing those just more and more versus what the expectation used to be.
Yeah, they're
right?
really
So
they're a
it's definitely-
manufactured home, right?
They're manufactured home. Yeah, well, we have two versions.
Yeah.
So we do have manufactured homes, and then we do have mobile homes.
Okay.
So manufactured homes are typically on a permanent foundation. So
Yeah.
the home has been manufactured elsewhere, and they're the ones that you see going down the road sometimes
Yeah.
on a wide load truck.
Yeah.
And then they get dropped on a foundation
Yeah.
somewhere, and they're put there. So the mobile homes we tend to have in communities, in mobile home communities,
Yeah.
where they are not on permanent foundations.
Right.
So you are able to, if you wanted to, get that home and move it because it's not on any sort of foundation. Typically in that situation, we are also leasing the land that it sits on because we are in a community, right, surrounded by all the same type of homes. So, it just kind of depends. We do have those both of those options available, and we do financing for all of them. So that's the good news.
That's awesome. Something we didn't touch on, and I know that this is kind of going long, and if you have to bug out and get back to what you're doing, that's great. But conventional financing, we didn't touch on it. I know there's a broad range of conventional financing that seems like Freddie and Fannie and other lenders are coming out with a lot of very cool and interesting stuff. Anything you want to share about conventional financing that might be different from the Streamline FHA or the VA IRRRL or those type of loan products? Is there anything unique?
Well, I do. I have one lender that's the number one, traditional lender in the United States, and they are currently offering on their conventional financing a 0% down. So they are offering with that a completely silent second.
Wow.
Added onto their loans to be able to help somebody get into their home in a conventional situation, because we also have properties that won't go FHA.
Right.
They won't, they're not allowable for USDA. And so we need to have that in our back pocket for people that also need that sort of help, is that they will allow us to get a second loan for that entirety of the down payment. So they put 0% down there, and that loan goes as a complete silent second. They don't have to make payments on it. It doesn't accrue any interest while it sits there, and they choose when they want to pay it back. So if somebody does, like if you're like me, I hate having a bill.
Yeah.
So I would start chopping away at that little second. While I could throw whatever you can on it, you can do that. Or you can wait until you get into a full-on situation where you're refining the home or selling the home. You can do that. It's really up to them at that
Is there a
point,
time limit
how
on
they
it?
want to pay.
No.
It's just the next time we alter the loan, So if they do, say, a year down the line want to refinance, then we will pay off that loan through the refinance. So that's the only contingency with that.
Is that loan at a higher interest rate, or what's the catch, or is there one?
Typically not. Like typically it's in a pretty good spot as far as interest rate goes. It might be slightly higher, just again because risk factors, but nothing where we're seeing like, oh, it would normally be, like let's say 6.5 and that one's 8. No bump like that.
Wow.
It's just a very slight kind of thing because it is just considered part of one of their first-time home buyer programs.
Wow, that's incredible. We'll have to have an entire thing on that because that's phenomenal. There's no income limits or restrictions.
There's a couple of different versions of how we fit people into the box. One version does have an income limit.
Okay.
But and one version has like a credit score limit or a credit score requirement.
Okay. Yeah.
So it's really just being able to fit people in those boxes. But that being said, it's still just a win across the board because we work very hard to make sure that we get them there.
Right.
If they're a little short on the credit score, I have programs within my credit pooling system where they can actually show me, hey, if we paid off this bill, if we paid down this bill, we could rescore you and get you where you need to be.
Wow.
And so that has also been a great win in situations like this where we do have a credit score requirement, because we want to get them into the program where they don't have to put any money down. Like that sounds great. A reasonable interest rate, no money down, and them to be able to get into the home that they love. We're going to go the distance, right? We're going to do what we have to do. And having those little programs in my back pocket is really where the difference is made.
Awesome. Hey, the next thing I'd like to talk about, just touch on real quick, PMI is private mortgage insurance. I see that oftentimes, used in the loan thing, in the loan atmosphere, but not all PMI is the same. Right? Like it seems like there are different lenders that charge different percentage of PMI. Can you speak to that? I don't know if you can or not. I don't even know if it's a subject, but I'm noticing some lenders' PMI is
higher.
They can kind of adjust. Talk about that, will you?
Absolutely. So typically we do have kind of a standard with the PMI, so that we have a lot of lenders, that use the same mix-up or calculation for what we're looking for as far as PMI goes. But we do have our lender that we typically use for conventional loans, which is the largest lender in the United States. And because, our company in general is in good standing, that we do a lot of business with them, and that we have a very, very close relationship with everybody there, we get special pricing on PMI. So that's kind of one of those things where we have the leg up, is that we don't have to charge as much for that sort of thing, because they're giving us a break and saying, hey, we know that you guys are good for it. We know that the loans you're doing are excellent. We don't have any worries about it. We're going to give you a cut on this. Like we're going to give them a break and be able to not have to charge them as much.
Yeah, that is a big deal. That's one of those kind of not hidden costs, because there's really nothing hidden. It's all exposed. But going in and just kind of taking the bait on a low interest rate thing that you saw on the internet isn't necessarily the whole story. As a matter of fact, it's not the whole story. It's just a tease.
It's not.
Yeah.
Absolutely. And it's one of the things that we try to combat here, because it is, looking at it from a consumer perspective. Well, I want what I saw. Like, I want that deal. That one looks great. But when we get down to the nitty gritty, what's it going to cost you? And so, here we make sure very, very adamantly, I always tell people I put my crazy on the front porch. You might not want to hear it, you might not want to see it, but this is the truth. Like this is our option. And so I want to make sure that we are all fully aware of our option walking into it, because again, the last thing I ever want to do is have somebody come back and be like, you did not do right by me. Like 250 loans, no one's ever come back and said I haven't done right by them. And there's a reason why. I'm very, very careful in that, perspective to be able to get them where they need to be. Yeah.
Hey, Jenny, it's been great. I look forward to our time together and doing these often, and just also showcasing our properties to our clientele with loan options. It's so important, and you're just doing a great job.
Thank you.
Yeah, we're blessed to have you. Hey, Jenny, thank you. This has been a blast. Appreciate you so much. I just want to make sure that the folks that are watching, listening, that are tuning in, how do they get a hold of you?
So the easiest way to get a hold of me is you can give me a call at 605-250-6867. You can also throw me an email if you'd like. It's jennyb@21stcentury21st centurylending.com.
Wow, that's awesome. That's great. We're obviously going to have you back much more. We're partnering with 21st Century Lending and with you, Jenny, and we couldn't be happier. Thanks so much. All right, if that information was beneficial to you, it might be beneficial to someone that you know. So be sure to share that with your friends. Also, please like the video and the channel by subscribing to it as well. We look forward to bringing you more great content, not only about financing, but also about all things real estate and many things about living.